Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to analyze Broadcom stock. I'm going to talk about why I believe Broadcom stock is likely one of the best AI stocks after Nvidia. As always, I would like to give you more context first. Last year, I made a video about Broadcom stock. I said that Broadcom would benefit a lot from the current AI revolution, just like Nvidia, because of Broadcom's custom ASIC AI accelerator business. Based on my intrinsic valuation, Broadcom stock was slightly undervalued or fairly valued during that time. So if you bought Broadcom stock since my first Broadcom stock analysis video, you have made around 93% in gain in less than 1 year. This is not bad at all compared to the S&P 500 return during the same period. Investing is always forward-looking. You may want to know, is Broadcom stock still a buy now, or is it better to wait for a larger dip? So in this video, I'm going to explain why I believe Broadcom is one of the best AI stocks after Nvidia. I will explain the major growth catalysts that will benefit Broadcom the most over the next several years. Specifically, I will talk about Broadcom's software infrastructure business, its networking and custom ASIC business, and why they will drive Broadcom's growth going forward. You will learn about these topics in this video. First, I will talk about Broadcom's business model, financials, and the biggest risks to consider. Then I will talk about Broadcom's long-term growth prospects in AI and Ethernet networking, Broadcom stock valuation, and whether I will buy Broadcom stock going forward. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing videos a week that will help you become a great investor. Each video usually takes me more than 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term. Follow my personal stock portfolios and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about Broadcom's biggest risk, I think it's very important to understand Broadcom's business model and financials first. So what is Broadcom and how does Broadcom earn its revenues? Broadcom designs and makes a large range of semiconductor products that are found in large data centers, servers, AI supercomputers, smartphones, modems, wireless devices, networking devices, and storage devices. Broadcom also provides infrastructure software solutions such as virtualization services, mainframe software, enterprise software, and cybersecurity services. Broadcom's semiconductor products include data center switch and routers, cable modems, Ethernet network interface cards or NICs, networking switch, filters and amplifiers, application-specific integrated circuits or ASICs, wireless chips, proprietary thin-band acoustic resonator, F-bar filters for iPhones, embedded processors, storage controllers, and fiber optic solutions. Broadcom's infrastructure software portfolio includes various mainframe software, enterprise software, cybersecurity services, and of course, virtualization software and cloud computing services from VMware. Broadcom acquired VMware for $69 billion in November 2023. Now, VMware is fully integrated into Broadcom. Here's the important part about Broadcom's semiconductor and infrastructure software businesses. This is Broadcom's growth strategy. It's very similar to Berkshire Hathaway's acquisition growth strategy. Broadcom focuses on acquiring well-established semiconductor companies that have leading technologies. In recent years, Broadcom has started acquiring infrastructure software companies such as Symantec and VMware. After acquiring each company, Broadcom focuses on optimizing operations and cutting costs to improve each business profitability. Broadcom tends to acquire very profitable businesses that focus on specific markets with high barriers to entry and with recurring revenue streams. This allows Broadcom to generate very strong free cash flow each year and to invest in R&D each year. Over the years, after many mergers and acquisitions, Broadcom now has 17 major franchises or businesses in these 5 major categories: networking, wireless, storage, broadband, and industrial. When it comes to reporting, management separates Broadcom's businesses into these 2 major segments: semiconductor business, and infrastructure software, which includes VMware. Here is the important part you should know. First, the networking and wireless businesses will be the biggest growth drivers for Broadcom going forward. Specifically, AI semiconductors will drive Broadcom's growth going forward. More on this later. Second, Broadcom will earn much more subscription revenues from software because of VMware. For example, before acquiring VMware, software subscriptions and services contributed about 22% of the company's total revenue in 2023. After acquiring VMware, software subscriptions and services contributed about 41% of the company's total revenue in 2024. This is very important because software subscription revenues will allow Broadcom to have much more stable revenue growth going forward, even if Broadcom's semiconductor revenue will continue to be very cyclical. Broadcom is well known for acquiring profitable businesses that have leading technologies in their markets. After acquiring a business, Broadcom tends to focus on reducing each business operating costs, getting rid of non-essential products and services, improving operation efficiencies, and improving revenues and free cash flows. Broadcom would then continue reinvesting in R&D each year to make sure each business continues to be a market leader in its specific market. Here's an example. VMware is the market leader in virtualization software and cloud computing software. Broadcom's management said this in the recent earnings call. This shows that VMware has become much more profitable and efficient than before.
We continue to drive down spending in VMware. We brought spending down to $1.2 billion in Q4, down from $1.3 billion in Q3. By reference, VMware spending was averaging over $2.4 billion per quarter prior to the acquisition, with operating margin less than 30%. Moving on to Q1 outlook for infrastructure software, we expect Q1 revenue to grow to $6.5 billion, up 11% sequentially and 41% up year on year. For VMware, ABV is expected to exceed $3 billion compared to $2.7 billion in the preceding quarter.
Here is another important part of Broadcom's infrastructure software business, which is now mainly driven by VMware. Based on what I know, VMware has ended most perpetual licenses. Now, VMware has transitioned most customers to subscription-based models. Again, this means Broadcom will earn much more stable and consistent subscription revenues from infrastructure software going forward. Let me show you these past financials. The semiconductor market is by nature very cyclical. Broadcom's revenue, operating income, and free cash flow have been growing very consistently over the past 10 years because of Broadcom's acquisition growth strategy. The biggest downside to Broadcom's acquisition growth strategy is that Broadcom often needs to issue a lot of debt or shares whenever it acquires other businesses. Broadcom's revenue growth, operating income, and cash flow growth will be more consistent and stable because of VMware's subscription revenues. Broadcom is one of the most profitable businesses in the semiconductor industry. Broadcom has had high gross margins well above 70%, high EBITDA margins, and high free cash flow margins over the years. Going forward, I believe Broadcom will maintain very high margins because management has been very disciplined in cutting costs, getting rid of non-essential products and services, and making each business more profitable than before. As I mentioned earlier, the biggest downside to Broadcom's acquisition growth strategy is that the company needs to issue a lot of debt or shares whenever it acquires large businesses such as VMware. For example, according to the most recent balance sheet, Broadcom had a total debt of $67.6 billion, which is a lot. In comparison, Broadcom had $9.3 billion in cash equivalents. This is much smaller than the total debt as shown here. Broadcom had to increase its debt level significantly when it acquired VMware. Going forward, Broadcom is planning to use 50% of its free cash flow to pay down its total debt over the next several years. I'm not worried about Broadcom's current debt level because Broadcom generates $19 billion or more in free cash flow each year. This is one of Broadcom's biggest risks. Apple is Broadcom's biggest customer. Apple contributed about 28% of Broadcom's value in 2024 and 21% of Broadcom's value in 2023. Apple buys 5G radio frequency components, thin bucket acoustic resonator, F-bar filters, various wireless chips, and Bluetooth components from Broadcom each year. All these wireless chips are used in Apple's iPhones. Here's the important part. Apple has been pushing to make more of its chips in-house because it wants to improve margins even more and reduce reliance on Qualcomm and Broadcom. Of course, if Apple can replace most of Broadcom's wireless chips, Broadcom will lose billions in revenues each year. This is based on what I know. I don't think Apple can replace Broadcom's wireless chips, especially the F-bar filters, anytime soon, because mobile wireless chips are extremely hard to develop. For example, Broadcom's F-bar filters used in iPhones are very difficult to replace because the company protects its IP by manufacturing them in-house using its own fabrication plants. While Broadcom outsources most of its chip manufacturing to TSMC, it manufactures F-bar filters in-house instead. Let's take a look at Broadcom's management. Under Hock Tang's leadership, Broadcom has grown from $3.7 billion in market cap in 2009 to over $1 trillion in market cap now, mainly because of Hock Tang's acquisition growth strategy I talked about earlier. In fact, Broadcom is very similar to Berkshire Hathaway, except that Broadcom only acquires profitable semiconductor businesses and infrastructure software businesses. However, at the time of making this video, Hock Tang is already 72 years old. He will probably manage Broadcom for another 10 years. I suspect that one of these executives will be Hock Tang's successor. Hopefully, his successor will be a great CEO like him. Let's talk about Broadcom's long-term growth prospects so you will know Broadcom's biggest growth drivers going forward. Over the next several years, I believe Broadcom's revenue and operating income will grow much more because of Broadcom's AI networking business and its custom ASIC business. These two businesses will be the biggest growth drivers going forward. According to this consensus forecast, Broadcom's value is expected to grow in the mid-teens to high teens over the next several years. If you have been following the semiconductor industry for a while, you will know that AI has been the biggest growth driver and the largest revenue contributor in the semiconductor market. On the other hand, the non-AI semiconductor market has decreased a lot over the past 2 years. The non-AI semiconductor market likely bottomed in 2024. Without AI, the entire semiconductor market would be down substantially over the past 2 years because of too much chip inventory and not enough demand for non-AI semiconductor products. Going forward, the networking business, which includes Ethernet networking technologies and custom ASIC AI accelerators, will be Broadcom's biggest growth driver. The second biggest growth driver will be the wireless business, which is largely dependent on Apple. As long as Apple sells more iPhones each year, Broadcom will earn higher revenues from Apple over time because Apple uses Broadcom's wireless chips, such as their F-bar filters, which are used in iPhones. Again, the biggest risk is that Apple is trying to make most of its chips in-house and reduce reliance on Broadcom and Qualcomm. The third biggest growth driver is VMware. I will focus on Broadcom's networking business because it will be Broadcom's biggest growth driver going forward. Here's the important part about Broadcom's networking business. There are two main networking technologies, Ethernet and Nvidia's proprietary InfiniBand. Broadcom is one of the market leaders in Ethernet networking, which is the gold standard for data center networking. Most hyperscalers prefer to use Ethernet for their AI data centers because Ethernet is the most common networking technology. Ethernet is very reliable, fast, secure, and widely accepted around the world. Ethernet is the backbone of the internet and most corporate networks. Moreover, Ethernet is much cheaper than Nvidia's proprietary InfiniBand networking platform. On the other hand, Nvidia's proprietary InfiniBand networking is generally much better for large-scale AI training and inferencing and other compute-intensive AI workloads. Based on what I know, InfiniBand is generally much faster with higher throughput and lower latencies than Ethernet in AI workloads. However, the biggest downside is that Nvidia's InfiniBand is very expensive, so most hyperscale customers still prefer to use Ethernet for their AI data centers. This is my prediction. Going forward, I believe Ethernet will be the de facto AI network instead of Nvidia's proprietary InfiniBand because Ethernet is more cost-effective and is already widely accepted in most data centers around the world. I believe this will benefit Broadcom the most because Broadcom is one of the market leaders in Ethernet technologies. Moreover, Broadcom makes some of the best Ethernet networking chips, switch, and adapters that are essential for large-scale AI servers. Hyperscale customers need to buy these networking chips, interconnects, and switch to connect AI GPUs and CPUs to build their AI systems. Also, here's another secular trend that will benefit Broadcom the most. All the hyperscale customers such as Amazon, Microsoft, Google, Meta, and Oracle are planning to increase their capex on AI infrastructure over the next several years. They are planning to build more large-scale AI data centers around the world. Each AI data center will have thousands of rack-scale AI servers connected to each other on a single networking fabric. This is very important because these large-scale AI data centers will require many more networking chips, switch, interconnects, and spines to connect all these AI servers together. All the hyperscale customers will need to buy AI networking chips and components from Broadcom when they are building their AI data centers. According to CNBC, Broadcom CEO Hock Tan said this in the most recent earnings call. We see our opportunity over the next 3 years in AI as massive. Specific hyperscalers have begun their respective journeys to develop their own custom AI accelerators. Here's the important part. Tan said Broadcom is currently developing AI chips with 3 very large customers, and he expects each of them to deploy 1 million AI chips in network clusters by 2027. Tan said the total market opportunity for its AI chips, which it calls XPUs, as well as parts for AI networking, could be between 60 billion and 90 billion by 2027. Here's the deal. As you may already know, Nvidia has a near monopoly in the AI accelerator market. In fact, Nvidia has over 90% of the AI accelerator market. The biggest issue is that Nvidia's AI systems are very expensive. For example, a top-end Blackwell GB200 NVL72 server can cost around $3 million each. If you want to build a very large AI data center with thousands of Nvidia Blackwell systems or thousands of last-gen Hopper systems, you will need to invest billions of dollars. This is why almost all the largest hyperscale customers, such as Amazon, Microsoft, Google, Meta, and OpenAI, are making their own custom AI chips so they don't need to rely 100% on Nvidia. This is a very important secular trend that will benefit Broadcom the most going forward. For example, Google uses its custom ASIC tensor processing units (TPUs) to train its AI models. Google collaborates with Broadcom to make its own TPUs or custom ASIC AI accelerators. Of course, these custom ASIC AI accelerators are meant for very specific workloads, such as training and inferencing the company's AI models. They cannot compete with Nvidia's merchant AI GPUs and rack-scale AI supercomputers, especially in AI training and AI software. Other than AI networking, Broadcom's custom ASIC business will grow much more over the next several years because Broadcom's largest ASIC customers are planning to build very large clusters of AI systems going forward. Based on what I know, there are 2 major players that dominate the custom ASIC market, Broadcom and Marvell Technology. Very few companies in the world have the expertise and the technologies to make custom AI chips for other companies. Broadcom's ASIC business has grown substantially in recent years because almost all the hyperscale customers are building their ASIC AI chips. They want to reduce their reliance on Nvidia and decrease the cost of building their AI data centers. Typically, the AI accelerator or the AI GPU is the most expensive component in an AI system, followed by networking chips. At the time of making this video, Broadcom already has 2 major ASIC customers, Google and Meta. The third customer is likely ByteDance. Recently, Broadcom announced that it has added 2 new ASIC customers. According to several industrial sources, these 2 new customers are likely Apple and OpenAI. Here's the important part you know. Broadcom CEO Hock Tan stated that Broadcom has 3 major ASIC customers. Each of them is planning to deploy 1 million custom AI accelerators on a single networking fabric by 2027. If this happens, it will be a huge increase compared to the 30,000 plus custom AI accelerators or XPUs per cluster in 2024. Moreover, Hock Tan gave this market forecast over the next several years. He believes that Broadcom's AI serviceable addressable market or SAM will increase to around 60 billion to 90 billion in fiscal 2027 alone. This is up from around 15 billion to 20 billion SAM in 2024. Broadcom's AI value was 12.2 billion in 2024. It had around 70% of the custom ASIC market in 2024. If you assume Broadcom will maintain the same 70% of the custom ASIC market, Broadcom's annual AI revenue should reach around $52.5 billion by 2027, or around 4 times its AI revenue in 2024. This $60 billion to $90 billion SAM is based on Broadcom's current 3 major customers, Google, Meta, and a third customer. Broadcom has not yet included the 2 new customers, Apple and OpenAI. This means that 2 new customers will likely increase Broadcom's AI serviceable addressable market or SAM once they tape out their AI chips and start producing them like Google and Meta. Of course, all these custom ASIC AI chips will be manufactured by TSMC. While I was writing this video script, TSMC announced another outstanding quarter. TSMC reported another record quarter with higher earnings and higher guidance than expected, mainly because of the very large demand for AI accelerators, custom ASIC chips, and HPC products. TSMC management said this. It indicates that Broadcom's AI networking and custom ASIC business will likely grow much more over the next 5 years.
Underpinned by our technology leadership and broad customer base, we now forecast the revenue growth from AI accelerators to approach a mid-40% CAGR for the 5-year period, starting off the already higher base of 2024. We expect AI accelerators to be the strongest driver of our HPC platform growth and the largest contributor in terms of our overall incremental revenue growth in the next several years.
Similarly, Broadcom's management said the same thing in their recent earnings call. Broadcom's management said this.
Before I sum up and provide you Q1 fiscal 25 guidance, let me outline a longer-term perspective on how we see our semiconductor business evolving over the next 3 years. On the broad portfolio of non-AI semiconductors, with its multiple end markets, we saw a cyclical bottom in fiscal 24 at $17.8 billion. We expect a recovery from this level at the industry's historical growth rate of mid-single digits. In sharp contrast, we see our opportunity over the next 3 years in AI as massive. Specific hyperscalers have begun their respective journeys to develop their own custom AI accelerators or XPUs, as well as network these XPUs with open and scalable Ethernet connectivity. For each of them, this represents a multi-year, not a quarter-to-quarter journey. As you know, we currently have 3 hyperscale customers who have developed their own multi-generational AI XPU roadmap to be deployed at varying rates over the next 3 years. In 2027, we believe each of them plans to deploy 1 million XPU clusters across a single fabric. We expect this to represent an AI revenue serviceable addressable market, or SAM, for XPUs and network in the range of $60 to $90 billion in fiscal 2027 alone. We are very well positioned to achieve a leading market share in this opportunity and expect this will drive a strong ramp from our 2024 AI revenue base of $12.2 billion. Keep in mind, though, this will not be a linear ramp. We'll show quarterly variability. To compound this, we have been selected by 2 additional hyperscalers and are in advanced development for their own next generation AI XPUs. We have line of sight to develop these prospects into revenue generating customers before 2027 and could therefore expand this SAM significantly. So the reality going forward for this company is that the AI semiconductor business will rapidly outgrow the non-AI semiconductor business. Recognizing this, we will now shift to guiding our semiconductor business by AI and non-AI revenue segments. The 60 to 90 billion, we are not talking cumulative SAM or TAM anymore. We are putting for you a destination, so to speak, a milestone, which happens to be 3 years hence, 2027, possibly slip a bit, part of 28, but 2027. We are seeing a destination 2027 or milestone, better one, where the deployment of those large-scale AI clusters, each on single fabric, pretty much to run those large LLM models, will come to $60 to $90 billion in that 1 year period. And collectively, all three of them. Okay, that's a very insightful question on the first one, anyway, where we are saying what is the baseline on the 60 to 90 billion in 3 years' time, where we are specifying down to these three customers of ours. And I would estimate at this 2024 for that to be about less than $20 billion, $15 to $20 billion at this point. In 2024, 15 to 20 billion going to 60 to 90 billion.
Let me show you this consensus forecast from Skin Alpha. Broadcom's revenue is expected to grow mid-teens to high teens over the next several years, which I think is reasonable. This is because Broadcom's AI networking and ASIC business will likely grow much more over the next 3 years. In terms of EPS forecast, Broadcom's EPS is expected to grow much faster over the next 3 years because Broadcom's operating expenses are expected to grow at a slower pace than its revenue growth. Broadcom will continue cutting more expenses and paying down its large debt over the next several years. Let's look at Broadcom's valuation. Broadcom's 4P is quite high. For example, at the time of making this video, Broadcom's 4P is expected to be around 36 this year. However, next year, Broadcom's 4P is expected to drop to around 30, which is much more reasonable. Considering these 4 EPS growth rates over the next 2 years, I believe a more reasonable 4P should be around 30. Let me show you this investing application I'm making with a friend. This is a preview. Our investing application will be out this year. The orange line represents Broadcom's fair value. The blue line is Broadcom's share price. The green dotted line is the analyst average price target. Of course, the best time to invest in an outstanding company is when the stock is below its fair value line or its intrinsic value, so there is a sufficient margin of safety to reduce risk. At the time of making this video, you can see that Broadcom's share price is above its fair value. Based on our investing app here, I believe Broadcom's fair value should be around $210 per share. This suggests that Broadcom stock is likely overvalued now, mainly because the market also anticipates that Broadcom's AI SAM will be much larger over the next 3 years. I also calculated Broadcom's intrinsic value myself. Based on my intrinsic value estimate here, I believe Broadcom's current intrinsic value is around $206 per share. This means I believe Broadcom is overvalued after the recent huge rally. So will I buy Broadcom stock? My answer is yes. I am planning to buy back Broadcom once it's below its fair value again. I made the mistake of selling Broadcom too early, right before the recent rally, so I would like to buy back Broadcom once it's undervalued again. In summary, I believe Broadcom's AI networking and custom ASIC business will grow much more over the next 2 to 3 years because hyperscale customers are planning to increase their AI capex to build much larger AI data centers around the world. All of them will need to invest in AI networking chips, Ethernet networking switch, interconnects, spines, and other networking technologies. I believe this secular trend will benefit Broadcom's networking business a lot. Moreover, Broadcom's 3 existing ASIC customers are all planning to deploy 1 million plus custom AI chips across a single networking fabric by 2027. Broadcom is also adding 2 new ASIC customers. This means Broadcom's AI networking and ASIC business will likely grow much more over the next several years. The biggest downside is that Broadcom has too much debt after acquiring VMware, so Broadcom will need to use most of its free cash flow to pay down its debt over the next several years. Now, all these are only my opinions and my analysis that's based on my research. They are not financial wise. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.